Welcome back. Well, the SGX Nifty is up, and of course, we have the market on such a strong winning spree within 4% of lifetime high for the Nifty. Deven Choksey of Krchoksey Securities is now joining us. Deven, good morning. Thanks for joining us. I wanted your thoughts first on the HDFC Group stocks. All of them have come back into life, and we saw that massive move in HDFC AMC and HDFC Life as well, yesterday. But what's your approach, especially for the big ones, HDFC and HDFC Bank?
Yes, Anuj, good morning. Well, I think for a very long period of time, I think these stocks have had, I think, the price correction, I think, which is definitely, I think, meaningful as far as I think one looks at the kind of, I think, problem that they were facing. Up till now, I think the HDFC Bank and HDFC Limited, particularly HDFC Bank at this point of time, I think quite susceptible to the kind of a technology adoption. And this is where I think probably they ended up, I think, acquiring less number of customers. Their loan book growth has been comparatively lower and all of that. I think they have overcome this particular situation and they're trying to overcome it far better. In fact, I think a promise would be that I think next 3-4 quarters down the line, I think HDFC Bank could possibly be seeing higher amount of, I think, technology adoption. And that could possibly mean that the better business conditions for them, both on the lending side as well as cost management side. At the same time, the risk management. So I think all in all put together, I think with the kind of promises that they have on faster adoption of technology, the undervalued stock, I would say, I think are now finding favor with investors in their portfolio. Comparatively, I find that HDFC Bank combination would remain, I think, a stronger proposition going forward, largely because of the balance book, I think, that they would have. On one side, I think they would have the mortgage assets as a book, I think, which is significant component. The retail lending part, I think, which will accelerate with the kind of technology adoption. And I think careful, but now a little bit more aggressive with calculation, I think, on the corporate lending side. The book is, I think, becoming more balanced. And the bank is promising to become, I think, double the size in next 3.5 to 4 years' time from current base of AUM. So from that perspective, I think this becomes a buying opportunity in the portfolio.
Deven, yesterday Muthoot Finance sold off some 12% on volumes, which were the highest since June of last year. 1-year high volumes, big crack. What's the road ahead for this one?
Honestly, Prashant, I think we wouldn't know too much about this company because we don't typically focus on, I think, the gold finance companies. So from perspective of, I think, looking at the businesses, I think we try and look at the NBFCs, which are either on the retail credit and at the same time, I think, on the housing credit, I think we would probably find them more comfortable in our portfolios.
Deven, hi, good morning. Most of the auto stocks have been hitting fresh 52-week highs. Yesterday was a very good day, whether it's Bazaar, Eicher, Apollo Tyres was up 6%, despite not a great set of numbers. What would your pick of the pack be now after the rally?
Yeah, good morning, Sonia. I think the continued preference would be on commercial vehicles. And I have been maintaining for a long time that commercial vehicle is one area where probably I think you're likely to see at least a sustainable bull run, I think, for next 3 years or above. The demand scenario is now emerging stronger, I think, which up till now was promising, but I think actually the on-the-ground actions are now being seen as far as I think the commercial vehicle demand scenario is concerned. On one side, we have got the infrastructure-led spending happening in the economy, which is creating the demand for the larger trucks at the same time, and all the offload vehicles. On the other side, I think the industrial activity is picking up, I think, which is creating higher amount of demand thrust also onto the LCV side, as far as I think the growth is concerned on the local areas, logistic management. And at the same, I think all the same, the scrappage policy is basically creating the higher demand for, I think, commercial vehicles. So to me, I think commercial vehicle looks within the auto space, I think, a very, very strong proposition. Passenger vehicles, I think, right now are experiencing huge amount of demand, also largely because of the backlog of, I think, previous quarters due to the chip shortage. And I think generally this quarter may be a dull quarter, but I guess I think this quarter is becoming a rewarding quarter for most of the auto companies, particularly in passenger vehicles. So that's where I think we are seeing these two preferences, the commercial vehicle and the passenger vehicle in that order, will be, I think, a choice to invest into the portfolio.
Okay, Deven, the stock of this month has been Zomato. It's, from 52-week lows, risen 60% almost. So what do you do? Back to 64 on the stock. If you bought it there, do you take it off or you participate in this run? What's your view?
So, Anuj, I think the last mile connectivity in the retail credit, I think in the retail commerce, and I think we see it is a quick commerce in this particular case. I think it is becoming, I think, a very important requirement. I think for many of the larger e-commerce companies. In my understanding, I think the stock price possibly has come back from what about 40 odd levels to I think what 60 plus level now is largely because of the fact that I think inherent strength of the company in managing the customers, inherent strength of the company in I think delivering the last mile to the customers, be it in the food aggregation, maybe I think it in the grocery. Now I think henceforth, if suppose I think some alliance takes place, which is a good possibility, I think then they would possibly be I think the last mile provider to some of the e-commerce companies. And given that kind of a situation, I guess I think the valuations has just got corrected. Maybe I think the fall in the price was largely due to the fact that I think unlocking of shares was taking place, and as a result of which market factored in the sell off. I think the correction in the price is suggesting that I think the stability is returning back. So I agree that I think still the loss making is continuing as far as business is concerned. But even if they promises to bring down the loss, I think over the next 3 to 4 quarters, then possibility of I think they becoming a favorable pick for many of the strategic vertical companies who could possibly align with Zomato kind of companies for their business growth in e-commerce segment.